Thanks for joining me here at Kalkinemedia. With inflation data creating much havoc in the market, an interest rate hike had become imminent to cool off the economy. The latest inflation numbers compelled the Australian Central Bank to raise the cash rate by 25 basis points. Many people are worried about their upcoming interest payments due to the larger than expected rate hike. The Reserve Bank of Australia's cash rate hike has been passed on to the customers through higher interest rates. Mortgage holders would especially be at risk as their monthly payments have risen. Any subsequent rate hikes would add up and result in a hefty amount of mortgage payment being paid each month. So how have the Big Four banks responded to the rate hike? The Commonwealth Bank of Australia had predicted that the Reserve Bank would raise the cash rate to a neutral rate of 1.25%. Westpac expected a cash rate hike to nearly 2% by June of 2023, while some analysts predicted the cash rate hike would reach 3.4% by August next year. From the previous cash rate of 0.10%, a rate hike to nearly 0.35% seems damaging for mortgage holders. You could say that the area of ultra-low interest rates is long gone. The high level of mortgage debt in Australia makes the country highly sensitive to any more interest rate changes. For National Australia Bank, owner-occupiers paying principal and interest on a debt of $0.4 million, the monthly repayments will rise by around $57 from May 13. A similar hike of $57 per month is applicable for those holding an Australian $0.45 million mortgage from Australia and New Zealand banking group effective May 13 also. So is an interest rate hike the perfect solution? An interest rate hike might make it difficult for households to meet the rising costs of living. The prices of non-discretionary goods have risen faster than the wages of most Australians. Most of this rise in prices can be attributed to the international supply chain disruptions. The Russia-Ukraine war has hampered the supply of goods right across the globe. The RBA believes that households would be able to manage these increased expenses even when their fixed rate term expires. As a last resort, mortgage holders can look for some fixed rates that are marginally lower than the long-term expectations for the interest rates. However, any last-minute changes should be made carefully and, of course, with full consideration. For any more info, check out the website here, kalkinemedia.com. I'm Rose Jacobs. Thank you for joining me.